Uranium Energy Corporation has been gaining attention as global demand for nuclear energy surges. But is UEC the best uranium stock to buy in 2025? With a strong push toward clean energy and growing government support for nuclear power, the uranium market is experiencing renewed momentum. UEC has strategically positioned itself to capitalize on these trends, leveraging rising uranium prices and increasing demand for nuclear fuel. The big question is, can it outperform competitors like Cameco and Denison Mines to deliver strong returns for investors? Let's dive into UEC's growth strategy, financial performance, and future outlook to determine if it deserves a place in your portfolio. As a leading US-based uranium company, UEC focuses on low-cost, in-situ recovery mining, a more efficient and environmentally friendly method compared to traditional hard rock mining. This approach gives UEC a cost advantage and greater flexibility in responding to market shifts. Over the years, UEC has built a strong portfolio of uranium assets and made strategic acquisitions that expand its production capacity. With a growing stockpile of uranium and the ability to scale production quickly, UEC is positioning itself as a key player in the uranium sector. Before we dive into the details, make sure to subscribe to Stocks Telegraph for the latest stock insights. Drop a comment below. Do you think UEC is the best uranium stock for 2025, or is there another uranium stock on your radar? The global nuclear energy sector is undergoing a resurgence as nations prioritize clean energy, energy security, and industrial electrification. Countries like China, India, and the US are making significant investments in nuclear energy, presenting major growth opportunities for uranium producers. In the US, policymakers are pushing to increase domestic uranium production, reducing reliance on foreign suppliers. China, one of the fastest-growing nuclear markets, has several new reactors under construction, aiming to double its nuclear capacity by 2035. India is also ramping up its nuclear energy output, with plans to expand from 6,780 megawatts to over 22,000 megawatts by 2031. At the same time, uranium supply is tightening due to geopolitical factors and production limitations. The US has banned uranium imports from Russia, a major supplier, disrupting existing supply chains. Additionally, Kazakhstan, one of the world's largest uranium producers, has reported production challenges. With demand outpacing supply, uranium prices have surged, creating a strong market environment for miners like UEC. Recent U.S. government policies reflect a strong commitment to strengthening domestic uranium production. The Department of Energy has allocated $3.4 billion to boost uranium enrichment capabilities and reduce dependency on foreign imports. Additionally, there is increasing pressure to classify uranium as a critical mineral, which would unlock federal funding and accelerate new mining projects. With these tailwinds, UEC is well-positioned to capitalize on the uranium bull market and strengthen its role as a key domestic supplier. UEC stands out in the uranium industry due to several key advantages that give it a strong competitive position. One of UEC's biggest strengths is its use of in-situ recovery mining, which is considered the most cost-effective and environmentally friendly method for uranium extraction. Unlike traditional open-pit or underground mining, ISR involves pumping a leaching solution into underground uranium deposits, dissolving the uranium, and extracting it to the surface. This method requires less capital investment, reduces surface disruption, and allows for quicker scalability, a major advantage in a market where timing production with rising prices can make a significant impact on profits. Another key differentiator is UEC's debt-free balance sheet. In an industry where uranium mining projects can be capital-intensive, UEC has avoided taking on excessive debt, allowing it to remain financially flexible and pursue expansion opportunities without the burden of interest payments. This contrasts with competitors that have higher leverage, which could limit their ability to scale operations efficiently. UEC has also expanded aggressively through strategic acquisitions. It recently acquired Uranium One's U.S. assets, including the Willow Creek ISR processing facility in Wyoming, strengthening its ability to produce uranium domestically. UEC's stock has experienced a strong rally over the past year, gaining over 154%, significantly outperforming both the broader market and energy sector. This increase reflects rising uranium prices, increased investor interest in nuclear energy, and the company's expansion efforts. Financially, UEC reported $224,000 in revenue for 2024, a sharp decline from the $164 million recorded in 2023. However, this drop was due to the company strategically holding back sales to benefit from rising uranium prices. Analysts project UEC's earnings to grow at an annual rate of 64.02%, signaling strong upside potential. Investor sentiment has remained positive, with institutional investors such as BlackRock, Vanguard, and Mirae Asset Global Investments increasing their holdings in UEC. Analysts currently have a strong buy rating on UEC stock, with a 12-month price target of $10.63, suggesting a potential 107% upside from current levels. UEC's ISR mining operations in Texas and Wyoming give it the ability to scale up production rapidly in response to rising uranium prices. This first-mover advantage allows UEC to capitalize on demand faster than competitors reliant on traditional mining methods. The company is also well-positioned to benefit from potential U.S. government contracts for uranium purchases. With policies shifting towards building strategic uranium reserves, UEC could see increased revenue from government-backed agreements. Additionally, rising uranium prices are a major catalyst. Supply chain disruptions and geopolitical instability have caused uranium prices to trend higher, increasing the value of UEC's uranium stockpile. If prices continue to rise, UEC's stock could see even greater upside potential. Despite its strong position, UEC is not without risks. Uranium prices are historically volatile, and a sudden downturn could affect profitability. While UEC has a large uranium inventory, sustained low prices could pressure margins. Regulatory hurdles and environmental concerns are another challenge. Even though ISR mining is considered more eco-friendly, the process still faces scrutiny, particularly regarding potential groundwater contamination. Increased regulatory restrictions could slow down UEC's expansion efforts. Operational risks also exist. Delays in obtaining permits, production bottlenecks, and supply chain disruptions could impact UEC's ability to ramp up production as quickly as planned. UEC presents a strong investment opportunity in the uranium sector, with low-cost mining, a strong balance sheet, strategic acquisitions, and a growing uranium stockpile. Analysts maintain a buy rating with a price target of $10.50, representing a 120% potential upside. However, investors should consider market risks, uranium price volatility, and regulatory hurdles before making a decision. For those bullish on nuclear energy, UEC remains one of the most attractive uranium stocks for long-term growth. UEC is well-positioned to capitalize on the rising demand for uranium with a cost-effective mining approach, financial stability, and key government backing. While market volatility and regulatory risks remain, the company's strategic positioning makes it a strong contender in the uranium sector. Do you think UEC is the best uranium stock for 2025, or is there another company that deserves more attention? Drop a comment below, hit that like button, and subscribe to Stocks Telegraph for more in-depth stock analysis. Thanks for watching, and see you in the next one.